Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepo Modiba. Thanks for joining me. Tonight, I'm joined by Brian Dlamini, consultant at Afriwise Consult, for a closer look at the African mining industry. Brian, thank you for joining us. And I still get to say it. Happy New Year.
Yeah, Happy New Year to yourself as well.
Thank you. Let's talk commodities, commodity prices a little bit. Certainly, the last couple of months of 2016, I think there's probably a bit of a relief rally. I think a lot of the mining businesses around the world are probably quite happy with where commodity prices have recovered from. Your touch on, I guess, the space broadly, and then we can start talking about opportunities that come from that.
Yeah, so I think, in kind of setting the scene, you are right, things are gradually improving in terms of commodity prices from observations. But I think it's a question of expectations as well. I think it's a gradual recovery.
Right.
Most analysts are saying 2018 is actually the year to watch in terms of a more sustained or sustainable, trend upwards.
Okay.
So all market participants or players in the market, especially listening to some banks, they've been saying, look, we never know when, but then when we start seeing a recovery in the commodities, in the commodity world, then we know that on the back of that we should start approaching clients to reinvest.
Okay, so what does that mean then for the continent, and specifically for, I guess, those mining-heavy economies? Are we likely to see a refocus on those economies and investor appetite returning?
Well, I'm already listening to a couple of, especially looking at Ethiopia.
Right.
Which presented at the mining Modiba. They sold their story. Right. And already you can see that certain countries are already positioning themselves. Now they're looking at a possible recovery as, now the time to start talking to investors.
Right.
Unfortunately, countries can't choose what resources are in the ground. So it's almost a two-way conversation. You also need to find the investors that have appetite, know-how, interest for your commodity or the abundant commodity. So it's always going to be tricky from that perspective. But generally, one should start seeing a refocus, reinvestment, rejigging. It's been a painful, I think, 2 years almost, and I think perhaps now mining giants that have reorganized themselves would be looking now to take the opportunities, or rather the expansion game to the next level.
From an investment perspective, which country is best placed to, I guess, benefit from a stable or rising commodity price environment?
Yeah, so according to FinCap investment bank, they've done a study similar to what the Fraser Index as well does, and they're backing 5 countries actually.
Okay.
Botswana, Namibia, with Botswana coming out at number 1, just by the way.
Right.
And Namibia, they're backing Senegal. They're looking at a country such as Ethiopia as well.
Yep.
That's also in the mix. And I think the other side of the equation is that they also look at countries that are not so attractive from that perspective, and they're staying away from, or they advise investors to stay away from Eritrea.
Right. So before touching on Eritrea and the countries to stay away from, what drives, I guess, a great destination from a stable commodity price environment? Is it a function of infrastructure? What is it that will make, that investors should look out for and say, okay, cool, that's the country you should focus on, that's the country where opportunities are coming up? Or what drives that decision?
So I think there's 3 factors that come into the equation. The commodity market needs to be quite bullish.
Right.
You know, so you need to be able to sell what you mine. Then the second part is this country risk issues that you need to navigate yourself around. Regulatory, political, environment, the usual.
Right.
Also looking at, you know, social issues, you know, and also how to work with the government of the day. That's the second point. But the third point is also looking at timing. Right. When do you actually make your move? You want to be a first mover, you want to be the biggest explorer, you want to be the biggest mine. Right. You don't go in when everybody is almost depleted, whatever resource you're going for. So those three things count quite a lot.
So it's not even a function of infrastructure. You're saying really if policy allows or is conducive for investments, actually infrastructure may be secondary to that.
I think in terms of infrastructure, of course it's necessary. Right. But once you have a legal and regulatory framework which allows you to go and start building stuff alongside government and talking to people and coming up with a value prop, and crunching your numbers and saying, look, I will, for the purposes of mining, I will have to build a power plant. Right. This is how much it's going to cost. It's allowed in the law. I've talked to government. I don't expect surprises. Yeah. We've negotiated our tariffs. I think that's a nicer story to have than to have the infrastructure, the South African case, and then things change down the line. Right. 59 times along the way. Right. That's a different. It causes uncertainty. Right. So you'd rather have a wide-ranging or inclusive conversation with all stakeholders, and then identify what the risks are, what's needed, then proceed from there, including making sure that infrastructure is available.
So then I guess the inference is that those countries that you've identified have that in place, a stable political landscape that is conducive for these investments.
Yes.
So what about markets like Zambia, as an example? We know the good story there, clean elections, IMF program coming on board. Is there scope, again, for copper producers to be bullish there? And are we likely to see, I guess, investment coming into these different countries, including Zambia?
Yeah. So we are likely to see more investment going into Zambia. I mean, right. We've already seen the announcement by Glencore, buying out that's in the DRC though, buying out a stake of the then Gatler Group, wanting to expand the copper mining business, and that so happens to be in the copper reef which borders Zambia, and based on that, you would expect that in Zambia it would also be the same case where, miners would want to put in more money, etc. But it's a tough game because it's two different jurisdictions. Labor laws are different. When you ramp up, what do you need to do? When you, start thinking about expansion, are you allowed? How long are you allowed to for instance, in your mining license, can you easily change share ownership? Though all those issues come into the equation, but by and large, I think Zambia is one of those classic cases where miners have been mining and they will continue mining for quite some time. Yeah.
I guess then the next question is there for investors. Is it a function of the type of commodity that influences your destination? Or, as you've touched on, the underlying fundamentals of each country? Where in those two options do you guys sit?
So, I mean, I think it's a combination of the two. Right. Like I said in the beginning, countries can't choose the commodity, and investors also go to countries where, they need to find a certain commodity. They also don't choose the legal framework that they're going to deal with or whatever the case might be. Right. So somewhere along the line, the two find each other. And as long as, it's a classic case of if I mine something and it costs me X amount, I can sell it for X amount more, and then it makes sense to then mine.
Right.
If you can't sell it, then it doesn't make any sense. Now you obviously find a different case, with the Chinese miners who will have, who are not sensitive to price movements. They mine because they need that commodity.
Right.
And there's a lot of support, or there's some support from government, and they'll write off whatever, above market cost against some assistance from government.
Yeah. You touch on, I guess, everybody talks about mining and immediately China comes to mind. How important will China and India going forward be for the African mining industry? Are we likely to see partnerships with local enterprises? How much of the future success of African mining is a function of those two countries?
Well, I mean, China's made a lot of investments. In fact, they've just made announcements that they'll invest, or the Chinese will invest much more in Africa, including mining. So one can kind of read from that Chinese influence and Chinese mining interests will only increase going forward. In looking at it from the perspective of, well, will they work with local companies and etc. I think we're getting to the stage where we've seen Chinese mining companies that use local partners now, that engage in a much more transparent manner. Not to say that Chinese companies are not transparent, but it's just perhaps a cultural divide or culture issue where perhaps people are used to doing things in a certain way, and in Africa you have to then engage with local communities, state your case, work with the government, find out where the local suppliers are, know how to move artisanal miners, how to share skills, all that type of let's call it softer issues. You'd have to put a lot of emphasis and attention on if you're a Chinese or any other investor for that matter.
Perfect. Let's leave it there. Thanks to my guest, Brian Dlamini, consultant at Afriwise Consult. That's all from Buy Africa this week. Remember to follow me on Twitter. That's at Modiba_Tshepo. And send us your thoughts about the show using the hashtag Buy Africa. From myself and the team, goodbye.